The Bay Area housing market is on absolute fire. This is not front page news, but is the South Bay and our cities in the South Bay starting to experience a slowdown? Coming up on this Bay Area Housing Market Minute. When you look at the data of some cities in the South Bay, we are starting to see a sign of a potential slowdown. And so I just wanted to go over one particular city today that I'm experiencing this or I'm noticing this, and that is in the city of Campbell. But before we go into the data, if you are a home buyer in today's Bay Area market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the zip code or neighborhood or area that you're looking in, and we will send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a data set to assist you in your decision making and or pricing your property, you can go ahead and text the word data plus your property address to the number down below, and we will send that straight to your inbox. As I was going over the trend reports, I was noticing that in Campbell, California specifically, we were starting to see the list price to sales price ratio diminish month over month. And this is not just a 1 month trend, this is a 3-month trend where we're seeing from 111% in May of this year to 105% in July of this year. And so when we look at this data, like at first it might seem like, okay, well, the market is still doing exceptionally well. And by all means, it still is. But this is definitely something to pay attention to, because as we start to go into the fall months, if we continue to see this decline, we'll see a stagnation in the price acceleration velocity month over month. And this is not unique to Campbell, but this is just one example of many cities right now where we're starting to see this. Now, could this be a summer slump? I have discussed in many data videos in the past how in the summer, typically, we start to see a slowdown in the marketplace. This is not unique to this year. Last year, we saw definitely higher than normal activity levels, but that was pent up demand from the COVID slump that we experienced during the spring. And it makes common sense. We intuitively, all of the inventory, all of the sales that should have occurred in the spring of 2020 happened in the summer of 2020. And that's why we experienced such a hot summer. And so could this be a summer slump, or could this be forecasting and shadowing for a market to come in the later part of 2020 and early 2021? Time will tell. That being said, for those of you that are getting all high and excited about the possibility of a market correction, what you need to understand is that we are far away from any sort of possible neutralization in the marketplace to where we're seeing a buyer's market. If you look at the graph here on your screen, you'll see that right now in Campbell, we have 0.9 months of inventory available. And so when you think about what needs to happen for the market to shift, we would need to see a sharp increase in supply or a sharp decrease in demand. And in order from a supply standpoint to reach homeostasis, literally just break even neutral, we would need to see triple the amount of inventory. You notice there, a neutral market is 3 to 6 months of inventory. We would literally need to more than triple in order to have any sort of neutral marketplace. So we're still far away from that happening. And on the demand side of things, that is not going away anytime soon. If you look at the absorption rates here, and the absorption rate is the amount of inventory that's being absorbed by the marketplace month over month right now, we are seeing 114% absorption rate. We would need the market to fall to 33%, the absorption rate to fall to 33%. That is a drastic drop in demand. We're talking nearly an 80-point spread in order to get to a neutral marketplace from a demand perspective. Meaning if inventory levels stayed the same, we would need to see demand drop nearly 80% in order to reach homeostasis. So again, we're a far ways away from the market dropping or free falling, but we could be closer than expected to see a neutralization in the marketplace. So definitely be sure to stay tuned. My team is here to continually provide you with the most up-to-date and relevant real estate information. Once again, everyone, this is Danny Gould with Selling Silicon Valley Group, and I will catch all of you in the next video.